Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How's it going out there? Another wild day, huh? This is a recorded version, in case you haven't been able to tell, but I still have lots of cool things to cover for you here. I have fancy businessman things to do tonight, but I'm still going to wear my hoodie. So I had to do the recorded version here today. Stock market, again, trying to recover there. Oh, by the way, I should say no wine and wealth this week because we'll be closing the office. We're going to go try to ski a little bit if you haven't heard already. But don't worry about it. We have already 3 classes so far this year in the wine and wealth there. Think about how much that's helped. Like, what advisors already done 3 classes for you to try to help. Also in your portal, you've got 2 different articles where I was kind of ranting a little bit about some tax tricks and things you may be able to use this year. I'm not a CPA, but based on how last year played out, there's some ideas that you might want to work with. So you'll find that in your portal there. And of course, we'll be back tomorrow live to do this again. But let's take a look at the markets here. Take a look at the markets. There's the S&P on the screen. Still wiggling around a little bit because it is early still. Very interesting yesterday, by the way. Did you see the volume? I mean, I saw it was high, but I was looking back to see how high was that. That 252 million shares on the old SPY. If you're using the ETF, that's the most since March of that 2020 COVID drop that we had there. So gives you another idea. We talked about it yesterday, but another idea of just how wide range of a day that was and how active it was. And as far as that goes, there were only 3 other days in the last 45 years that were down more than we were yesterday and still turned positive there by the day's end. I thought a Truist analyst said it the best, actually. I was saying yesterday how, look, that we were used to lower volatility and now it's higher but more accurate volatility. He had said basically we average 1 10% drawdown a year and 3.4 5% drawdowns a year, and yet we've only had 1 5% drawdown in the last year. So investors are just now contending with normal market volatility, and extremely well said. I'll give you a visual here to show you, if I can find it, where we're just charting that, right? Just put it on a plot. Here is the S&P's volatility. We're looking back 3 years just to show you here. You can see the dates at the bottom. Average volatility for the stock market, the S&P, is 17.25% if we're measuring it against itself. And where we stand now, average, right? Not above average. But look, we spent all this time below average, significantly below average, I might add. And now we're just reverting back to the norm. So it's another way to look at it and go, this market's actually no different than it typically is. We just got sucked into this little time period of sleepiness and forgot how, volatile the stock market can actually be. Which is why I go back to the same thing I've been saying. Don't let inflation, don't let the stock market, don't let your personal excess cash create some sort of emotion that, oh my God, I'm losing to inflation. I got to put it in the market. Because we've been seeing lower volatility. You're just asking for it there. You know what I'm talking about? You know what I'm talking about. All right, if we're looking inside the S&P here today, financials and energy. I was joking with Cody earlier that I was looking at our sort of our side trades that we have. You could tell because we had financials rally first, and we're like, oh, this market's being led by financials and energy without even looking at the market. And as you look at the individual stocks, you're going to find the same thing. Your best performers are in the energy space. You got Devon Energy almost hitting new highs. Schlumberger hitting new highs. I believe they had earnings. You got Zion Bank, right? 5.9% gain on the day. ConocoPhillips, EOG, CVX, right? You could look through the whole list and see very quickly that's where all the action was. As you're scrolling through just a little bit more, you're going to start to find your financials. Discover Financial started to wake up. Capital One started to wake up. Look at the XLF as a whole. They were the first to start this rally, this sort of mid-afternoon-ish time period there. If you're looking at the Nasdaq today, well, not quite as good. It's, as I'm recording this, we're getting the Microsoft earnings punch. So Microsoft, there you go. Microsoft reported earnings after the close, and so that's trading, was just a second ago, trading down about 15%. So that's hitting the Nasdaq just for the moment. But if we go back and look at the Nasdaq, it too attempted a rally here today. And yesterday, down over 4%. Just for fun, I look back, there were only 5 other times in the Nasdaq's history where it was down 4% or more and finished positive on the day. Again, to show you how odd that really is. And so what I did for the Nasdaq, because we always focus on the S&P, I said, okay, well, of those times, let's take a look at the forward performance, because we did the S&P yesterday. Here's the Nasdaq. So when we have the Nasdaq falling greater than 4% and then finishing positive on the day, here is the average performance, and there's only 5 events, right? So it's not like a dramatic amount of data. 1 day later, 1.3%. We actually didn't get that today. 1 week later, 1 month, 3 months, all averaged to the downside for the Nasdaq, and 1 year later, positive. I will say that if you look at 1 month, here's the data on that. Of the last 5 times, not one single time was the Nasdaq higher a month later after falling 4% in 1 day and trying to recover. Every single time it was negative. 0.5%, 12%, 8%, 2%, and 5.5%. If you look out 3 months later, there's only one time, 1997, where the Nasdaq finished 3 months later higher than where it was on the day that it fell 4% and rallied back. So 1% in 1997. Otherwise, you're down 13%, 12%, 6%, 7%. It's good news for those of you that are looking for that pullback. You look at this market here and go, yeah, we may bounce a little bit and try to recover, get the Fed out of the way and all that great stuff, but I'm not expecting this to just deliver miraculous gains from here. That's kind of my mindset at the moment too. I want to see this bounce happen, however strong or weak it is, but watch it fade away as it starts to give you a little bit of rally. And it likely will just give us a little bit of a rally here. So we'll be watching, of course, and ready to play along. Anyways, in the Nasdaq, if you're looking today, we'll get my little guy to perk up here and start doing its thing. There you go. In the Nasdaq, you just got a handful of names. You got Packer, or Pacer. Baidu, just a touch higher on the day. Marriott, up about 1%, and JD.com, to put in another Chinese name for you. Other than that, Peloton, again, the weakest performer. That's the second time in the last 4 days that's been the case. Dexcom, getting very extended here, starting to fall. Netflix, wiggling. It looks just like the Nasdaq, right? Yesterday, reversal. Today, not able to get anything going. Oh, that's not sorted, actually. There you go. Datadog, down 8%. Marvell down 7 and working its way towards the 200-day. Xilinx, semiconductors were weak today. They were the weakest area of the market, weakest industry, I should say. IDEX as well, just a couple names that are getting extended there. And Lucid looking like it's going to break back down towards the 200-day, just to cover a few names. Look, it would appear that the bad news is mounting, right? We know about inflation. We know the Fed's going to be tightening. We'll find out tomorrow what they say. We know about the Russia-Ukraine thing is happening, right? You know it's happening. We're already sending aid over there. We're sending military equipment. We're sending troops into NATO. We've got earlier today potential bans on chips, sanctions on chips there set to Russia. And so we've got all this going on. They're not doing this because we're just trying to posture and maybe they won't do it. This is happening. So I think Biden even said last week he knows that Russia will invade Ukraine to some degree, I guess. Those were his exact words there. So preparation for that, that's kind of bad. And then the North Korea shooting off missiles, that would have been a huge headline like 2 years ago. They shoot off a missile, nobody seems to mention it. But you got those kind of things going on, and that is no doubt playing into a little bit of this when you're looking at the broad markets. So something to be aware of there. New highs today and new lows, very small list. Of the 6 new highs here today, it didn't update. Of the 6 new highs today, 5 were energy, 1 was financials, right? I already mentioned Schlumberger hitting new highs. Halliburton is another one that broke to new highs as well. The one financial was Travelers. Really cool looking breakout here. This one's getting stronger by the minute. With financials pulling back as a whole, Travelers didn't. See the relative strength there? So that gets a point. You got Invesco also is one of the ones that, this was a new low. Also one of the ones that made a new low but tried to bounce. There were 4 of those today. I point out a few here for you. You got Invesco and 3M, which had earnings that reported a little bit better than expected. Actually, kind of quite a bit better. So that started off hitting new lows, but very much finished positive for the day, so no problems there. Any stocks in the news today are going to be earnings related. It's earnings season, right? American Express with earnings out, better than expected, stronger revenues. Guidance was a bit of the miss. They beat across the board, but they're increasing their spending thanks to record card usage. Not my words, their words. Record card usage. You swiping it, right? Is that what's going on there? Seems that way. American Express, you can't hide from them. They're telling me the truth. NVIDIA down to the 200-day moving average. The company, I believe, officially abandoned their deal to buy ARM. It just wasn't going to fall through. I think they got a lawsuit filed against them by the government, so they're not doing that deal. So a little bit lower on the day. Logitech with earnings. I thought it was kind of mixed. Earnings were better than expected. Revenues better than expected. They did raise guidance, but they raised it as saying, okay, we're going to raise guidance, but not to the top end of your range. We are going to slow down a little bit here. Nonetheless, the stock was up 0.5% on the day. General Electric, so there you go. General Electric out with earnings better than expected. They did lower guidance. The stock was down about 6%. Revenue missed on all segments. You got a 10% drop in the power aviation divisions. And their quote that I pulled was, they are planning for continued inflation challenges. So remember, we've been seeing that out of the companies reporting earnings, inflation challenges, inflation, supply chain, things like that. So they continue those comments, and a big name like that, you want to pay attention to that. Raytheon up 2.5% on the day. Beat by earnings. Revenues were weaker than expected. They did lower guidance, same thing. They lowered guidance pretty much as expected, so it wasn't a big deal there. And anything else today is all earnings. Steel Dynamics, Verizon beat, raised their guidance going forward. Xerox better than expected. Overall revenues were down. So you kind of get an idea. We're in the thick of earnings. I could do the whole class on earnings. Raytheon, by the way, breaking its trend, right? So Raytheon down like the last 6 or 7 earnings reports. There you go. Broke the trend. Good to see there. We own it, so happy to see that. You've got Boeing up tomorrow. ADP, General Dynamics, Progressive, AT&T, Intel, Lam Research, Seagate Technologies, Tesla will be the big one after the close. Tesla's beats 64% of the time on earnings. They've gotten better, right? It used to be really weak because it was a growing company. 73% of the time on revenue. And it's very spotty in terms of whether it'll be up and down or down for earnings, right? It's hit or miss. So it's a very tough one to play for earnings. And be obviously looking for comments on deliveries and production overseas there in Germany and Texas as well for an update on that. Other than that, that's pretty much all I have for you. I knew this would be a little bit of a quicker one today because of Mr. Businessman meeting there. Shopify, the trade that I have there, I had to roll that one out to March. Got a 75-cent credit for doing that. We can cover this when we start our new trading class in the research portal, but it was an in-the-money wide spread, so I had to roll that out and collect a little bit more credit in the meantime. Hess was closed. We talked about that already. I can delete that. Oh, good timing. All right, so Hess was out of that one. And the Starbucks. There you go. So Starbucks, I've got 2 plays. Got the 105, 115. I'm sorry, 105, 115 strangle. Rolled that one, the 120 call down to 115 for a 50-cent more credit. So now it's 115, 105. And then rolled it to March for 75 cents because, well, I had to. Right? So some of the ones were playing a little bit of defense there. I'll point out Newmont, momentum picking back up there, I hope. Oh, there's that thing again. So Newmont, we're playing the momentum here, pulled back a little bit, should have waited for that, but nonetheless still have that one there. That is a $60 put, just trying to join the general momentum, so not selling out of the money, not trying to be clever here, just trying to play the momentum, hopefully in Newmont and gold as well. You see gold doing the same thing? It's kind of, it's kind of waking up there, and we've got a little room. My thought process is that if gold could make it back to this high, I don't care if it breaks, that'd be enough to pull Newmont high enough to give me a short-term profit there. And again, we'll be covering this as we get back from our ski trip. We'll got a new set over there and a new segment called Office Trades, where we'll be doing our fun trades. We'll be doing them live and posting them posting that video live in the research site. If you want to join, jazzwealth.com/research, and we'll be putting it in there. And we're actually just going to show, for better or worse, show the actual positions rather than just tell you and you take my word for it. I think we'll be one of the only people that does that. And I'm not saying we're going to be slinging around millions of dollars, but hey, it helps, right? So I'll start off very slow so I can teach along the way, and then we'll pick it up rapidly from there, show you how things work. Anyways, that's all I got. Enjoy the rest of your day. We'll be back live tomorrow to do this with you guys, so I hope you'll join us for that. Enjoy, and I thank you all for watching either way. See ya.